Hi everybody, it's TJ with the PTU Trend Jumper and netpicks.com. I've had a lot of questions about the free Dow eMini trade plan that we give away. It's a free plan that's designed to trade a 5-minute chart with the Dow eMini. So I thought I would go through this week's trades. It's been a banner week for the strategy. Last week also was quite successful. In fact, this has been very consistent ever since we released it. It is totally free. You could certainly get your copy of it. The important thing is that you learn how to trade it properly and that you follow the rules of the trade plan. So let's go through this week's trades. I'm going to start with today and then just work my way backwards. Do it a little differently. We start at 820. You can see there's a setup here. You could tell because there's a little plus sign above the bar. That means we're going long. It's at 840. The entry is at 15.057. Now this strategy can be traded with 1, 2, or 3 positions. 3 positions being the preferred approach, but of course you want to make sure that you're adequately capitalized, and if you have a small account, you shouldn't try to do this with 3 positions. Start with 1 position. If you're starting with 1 position, you're going to go to the second target, and then you exit. That's it. Your trade is done. If you go with 2 positions, you would go to the second target and the third target. If you trade with 3 positions, you can then trail the third position with the trailer. Okay? So the first trade does trigger in, you can see, with a lot of momentum. It's a pretty good sized trade. And a few bars later, it zooms past that first target for 28 points. So if you're trading with a single position, today you would have made 28 points. It continues to move higher, hits the next target. So if you're trading with a second position, you would have made 38 points on the second position, and you're now up 66 points on the day at $5 a point. Now we're still trailing. We trail the purple line, but there's a rule in the trade plan that when you get a big spike move, you could tighten your stop. In this case, we would use the faster red dotted line, the jump line. You can also, if you get a spike move up, usually I'm using a 50-point measurement between the top to the purple line, or if I've doubled the distance from the price to my third target, somewhere way up there, then I'm going to tighten my stop even tighter. Okay? But this didn't quite go 50 points. It went 40-something points. So instead of being too aggressive, I want to give this trade room in case it has more in it to the upside, and I'm going to work around the faster jump line. Well, it does pull down. It stops out down here. You might think, well, why not up here? Well, I always base it on the last bar that closes above, and that was this bar. And then I take my reading. It's at 85. So I put my stop at 83. And so that one made 26 points. Okay, this bar here closed below the jump line. So I'm not going to move my stop. Now, you could work the faster white line if you want, in which case you would have been out up here. Now, I will do that, but like I said, I want to make sure that I've got a 50-point spread between the high of the bar and my purple line down here. And this was somewhere, it was I think a 44, 45 point spread. Wasn't quite 50 points. So it's important to just stick with the rules. Anyway, it's not such a bad result. 92 points today on the free trend jumper strategy for the Dow eMini. How did it do yesterday? So on Thursday, the market kind of started moving ahead of our start time. We started at 8:20. This is at 8. By the time it's 8:20, it's gone too far. It's already hit its full targets, and we're still waiting for our first trade of the day, which was unfortunate because this was a really great winner. But the first trade of the day came here at 9:30. 10 minutes later, it triggered in, and that one also went to its full targets. Not quite as big as the one before, but trade plans are there for a reason. It's the edge that we get over time that matters. It's still a nice winner. 12 points to the middle target, 16 points to the third. The trailer stops out for 6 points, and it's a 34-point day. Not bad. What happened on the day before, on Wednesday? All right, we're waiting for our start time, 8:20. That's a 725. Here we are at 755. Can we get in sync with this trade? We can't, because it already stopped out. You see it triggered in and then it came up and stopped out. So we're waiting to take the next trade. And here we are at 8:30 and we have a trade at 14.719. We always adjust down a tick below the key level. And we're going to 04 and 98. And you can see it gets there, 15 points, 21 points, spikes down, so we're going to trail the jump line, the red line. It comes up, gives us 7 points on the trailer, and it's a 43-point session. And so far you've seen we've only taken one trade per day, and we're getting some really great results. Alright, so 43 points, power of quitting, one and done. Let's see what happened on Tuesday the 8th. So on Tuesday the 8th, waiting for 8:20, we get a setup here right at 8:20, triggers in, hits the middle target. That was a small trade, looks big because of the scaling, but it was 8 points. That's the minimum size trade that we want to have. If it's smaller than 8 points, then we're going to ignore the targets and we're going to go to a 15 and a 25 point target. Okay, but this was 8. That qualifies. We count that. The next position stabs down, gets 12 points right there. And then you get the spike move. We move our stops down to follow the red dotted line. And actually that one got out at 14.846, which is right where the middle target was. And so that was another 8 points. So 28 points on the session on Tuesday, another one and done session. How about Monday? Monday was an interesting session because the setup bar was really small, okay, and it was at 8:10. Remember, we started at 8:20. So at 8:20, the price closed right on our entry, and we're able to get in. Notice the entry says 14.881. We're actually getting in at 14.879. We adjust around the zeros. So the entry is where this blue line is. And that's one tick in front of the second target. That's how small this was. Do we ignore these trades? No, we don't. Remember in the last example on the day after this one, on Tuesday, if the target's 8 points, we take it. But if it's smaller, we ignore it and we go to a 15 point and a 25 point target. So look what happens. This triggers in and it hits the 15 points, spikes down, hits the 25 points. So you got 40 points, third position, got the spike down, so you're going to trail the red dotted line, gets out right here for another 13 points. All in all, 53 points on the day. It's a $265 day, one trade. This week is only required one trade a day. That's it. It hits its goals. We're done. 250 points for 5 trades with the 3-position approach. This small trade happens quite often, and they're really good setups. And what I love about them is that the risk is so small. I mean, think about it. Your risk is where the stop is here, right? And where our entry is here. So you're only risking this much. The first target, 15 points away, is way down here. Look at the second target, way down here. The risk reward is just so good. You do not want to ignore the small trades. In fact, look what happened just on Friday. On Friday the 4th. On Friday the 4th, you had a similar situation. It's 8:20. It almost looks like the exact same setup bar, doesn't it? Same shape, same everything. And the entry is at 2.4. So just like the one that happened on Monday, the following Monday, on Friday, we had to adjust this down to 2.4, to here, right? And it's right on top of those targets. So it's too small to go to the middle target. We want to go 15 ticks below, or 15 points, right? So 24 becomes what? It becomes 09, right? And then 25 points becomes 14.899. Well, look what happens. It has no problem getting to 09 right here for 15 points. Let's go ahead and mark that. And it has no problem getting to 99, which is right there. You see? In fact, that's about as far as it went. Just overshot it a little bit. The trend jumper is supposed to be accurate. These trade plans are designed with the personality of the market and the chart in mind. Okay, so we ignore these targets. We don't want to ignore the trade. Look at that risk-reward ratio. I mean, this is the kind of trade I really like, because if you lose, you don't lose that much, and if you win a lot, right? And you got the spike move down. You could get out anywhere down in here, gift from the trade gods, or you can just stick with the plan and get out below the jump line, which would be right here. The reading on the jump line when the bar closed was at 16, so this one would get out at 18, right about there. Okay, didn't quite make as much as the fixed targets, but still a respectable move. And all in all, last Friday made 46 points, one and done. You see how this works? I get a lot of emails from traders saying they can't make money with this. They see trades that lose, that don't work. But the thing is that you have to use the trade plan. You have to follow the rules of the trade plan. You're getting great setups, but now how do you manage them? Which ones do you take? Which ones do you not take? It's all explained. It's explained in the training. It's explained in the trade plan. It's up to you to follow it. Okay, if you're going to not follow it, you're not going to get these same results. But this has been an amazing strategy. It's totally free. If you're listening to this video, grab yourself a copy. Try it out for yourself. It works on TradeStation or NinjaTrader.